Hi, welcome to Dorchester Advisors. Today I want to talk about the second quarter of 2025 and my outlook for the coming year. I think you'll find some of the investment insights quite useful. Now, in case we haven't met before, my name is Dushyant and I'm the founder and managing director of Dorchester Advisors. Here, we help individuals and families to build solid retirement portfolios that are capable of providing them with enough money to sustain them through their retirement. Let's talk about what really happened in quarter 2 of this year and why it's a reminder that staying disciplined does pay off. Now, the major asset classes, the investable universe, are cash, bonds, stocks, real estate, and commodities. Of these major classes, most were up this quarter, with the exception of real estate, REITs, and commodities. The non-US stocks surged 12.1%, and the US equities weren't far behind, climbing 10.9%. And what's the big takeaway? A well-diversified portfolio is still one of the smartest ways to preserve and grow your wealth over time. Now, let's be real. Q2 wasn't smooth sailing. As one prominent global strategist puts it, we've seen every flavor of risk this year: tariffs, wars, recession fears, US debt downgrades, and even AI competition, and so many more. And that left a lot of investors asking, is it different this time? But here's the thing. Markets are built to handle uncertainty. By the end of the quarter, despite all the noise, we still saw solid returns. The truth is, this time is different applies only when nothing is happening. Because let's face it, that's about never, and because markets thrive on events. Now, earlier this year, I said I don't plan on making big portfolio changes until markets settled. That discipline has served us well because trading during turmoil, that's basically market timing, and market timing almost never works. So, looking ahead, I expect more headline risk, trade tensions, Middle East conflicts, geopolitical uncertainty, etc. And after 2 strong years in 2023 and 2024, there may be pockets of weakness. But here's my conviction. Thoughtfully constructed portfolios with exposure to hundreds of the world's leading companies, folks like Apple, Nvidia, Amazon, JP Morgan Chase, etc. These are portfolios that are well positioned to weather economic storms and grow as the economy stabilizes. So our philosophy for high net worth investors stays the same. Hold the major assets in your portfolio. Maintain an equity bias to capture long-term growth and relentlessly control costs. This is not flashy, but it works. Remember, investing is about not reacting to every headline. Rather, it's about building wealth with patience and discipline. Thanks for visiting, and thanks again for listening in. I invite you to look through our website, and if our philosophy and approach resonate with you, give me a call. No obligations. I love talking everything investing. Thanks.